Can you guys see my screen? Okay, great. Okay, so in the previous class, we discussed about what is support and what is resistance. And also we discussed about the two theorems, which are, of course, both of them are useful for us. And also we talked about how to read a candlestick. Okay, just in a brief, let me just explain you again by taking 5 minutes. So this is what we call a candlestick, right? This is a red candlestick. That means the market is moving in the downward direction. And this is a green candlestick. That means the market is moving in the upward direction. Okay. We have this kind of situation. Basically, each and every candlestick provides us some kind of data. What kind of data? There are 4 different types of data it provides. Low of that time interval, high of that time interval, open of that time interval, and close of that time interval. Okay. In green candlestick, your open will be lower as compared to close. And in the red candlestick, your open will be high as compared to close. And low, of course, will be at the bottom of the bottom wick, and high will be at the top of the top wick. Okay. And also, then we discussed about what is support and what is a resistance, which is, of course, most important topic in trading. It has a weightage of almost 30%, you can say. Okay. And then on Bitcoin, I showed you how to draw support and resistance. Okay. So what is a support? A support is a zone from where the market moves in the upper direction. Yeah. See this one? That's a support, right? Why? Because from this point, the market went down, and then from right here, from this particular zone, it moved up, right? That's why it's a support zone. Again, same thing happened, right? See right here, the market did move down, and then again it moved up, right? So that's why it's a support zone. What is a resistance zone? From a resistance zone, the market moves in the downward direction. So this one you see, and you can clearly see, this is a Bitcoin chart I'm showing you. See how the market moved up, touched the zone, and then it moved down. Okay. Similarly, here also same thing. The market moved up, touched the same zone, which is around $25,000, and then it moved down. Okay. So this is what we call a resistance zone. I believe everything is clear in this case. Now we will move forward and we will talk about different topics today. So we have completed till 8th point. Okay, in this class, we will try to understand how to think as a trader, risk management, and if we have some time, then also we will talk about trading setup 01. Okay. Before I go to that part, let me just check this thing. Okay. So see, let's understand how to think as a trader. Now see, in each and every niche, whatever you do, for example, if someone is a doctor, he or she thinks in a different way, right? If someone is an architecture, they think in a different way, right? But each niche or each, you can say, skill has a different way of thinking. And as a trader also, we have to think in a different way. We have to think in terms of probability, in terms of risk, right? And that's why, see, I mean, of course, if you ask someone who is in art, who makes drawing or who create drawings, he thinks in a very different way as compared to someone who is doing the technical work, correct? So same thing with the traders. As a trader, we have to think in a different way. Now, what kind of different way? So first and foremost, we have to think in the terms of probability. Okay. We always want to increase the probability of our success. Okay. Now, how can you increase the probability of your success? By figuring out where is the support zone, where is the resistance zone. That is one case. By figuring out in which market phase we are in. That's the second thing. By using some indicators, let's say. Third thing. by using tools like Fibonacci, fourth part, right? So we have different tools. By using those tools, we always try to increase the probability of our success. So for example, if you have taken a long position, that means you want the market to move up. Okay. And if you want the market to move up, then you will use different tools and you will try to analyze the market. And then you will say, okay, according to this, this, and this, let's say 4 tools, and all of them are indicating that the market will move in the upper direction. That means now the probability or the chances of the market to move up has increased. Okay. The second thing is risk. So as a trader, of course, we don't want to lose money, right? That's not why we are here. We want to make money, in fact. Okay, so to make money, you want to increase the probability, and to make sure if you lose, then you want to lose less. For example, if I'm taking a trade, that means there is always a chance that I might lose my money. There is always a chance. As a trader, I mean, losing is a part of the game. Okay. And if I've taken any kind of trade, then of course, for example, let's say if I've taken a long position. So long position is something like you buy low right here. And then you, according to your analysis, you expect the market to move up. But what if the market goes down? What if in that case? Okay. So in that case, we have to manage our risk. Of course, in this class, we will talk about how to manage our risk, which we generally call risk management. Okay. So as a trader, you always want to decrease the risk. Okay. So see, any kind of class, any kind of YouTube video, any kind of PDF, okay, any kind of mentor can teach you these two things: how to increase the probability and how to decrease the risk, right? Anyone can teach you these two things. But the third part, which is for me, it's most important thing for any kind of trader, okay, which is your emotions. You always want to control your emotions. You always want to, you have to actually. There is no even, I mean, there is no chance. As a trader, if you get emotional about your trade, that means you have done something wrong. Okay, it's very simple. That means you have done some mistake. You might have not figured out what is a proper trend line, what is a proper support and resistance. You might have messed up in risk management, right? But as a trader, you always want to control your emotions. And how can you control your emotions? By analyzing the chart properly, by properly taking the risk management, okay, by using enough money which you can lose actually. That is also the part. For example, let's say if I have $10,000, that does not mean I have to take a trade by using all of my money. I can use part of it. I can use just 20%, 30%, maybe less than that also. Okay. But that's what we call risk management. And in this class, of course, we will talk about it. See, the third thing which I said is about emotions. No one can teach you. This will only come through practice. And you will learn it on your own. When you take a trade, you might feel some kind of greed, you might feel some kind of panic, okay, you might feel some kind of FUD or emotions, any kind of emotions, right? Okay, but from those emotions, you will learn that what you have done wrong. And believe me, if you are feeling emotional about your trade, let me show you what I mean by that. I don't know if I'm still in the trade or not. I think no, but yeah. So just now, I have taken a trade on link. You know, you can see link. Now, why I have taken a trade, everything is a different topic. But let's say if I have taken a trade on link and I have actually so somewhere this was my analysis regarding that. Okay. Now, for example, if I want to take a short position in this one. Okay, my analysis says the market will move down. Then what I will do? I will manage my risk properly. I will enter in a proper way. I will try to make my risk or this stop loss as low as possible. And also I will make this take profit area as high as possible. So for example, maybe I will exit right here. Now, why I will exit right here? Of course, 14.5 is a good number to exit. Okay, that's a different thing. But yeah, now you can see what I'm trying to do here. I'm trying to lose less and I'm trying to gain more. This is a short position. So I'm betting on the market and I want the market to move down. Okay, so I'm not betting on the market to move up. I'm betting on the market to move down. That's what we call a short position. Okay, but you can see the difference. This is green, this red area, and this green area. See the difference? I want more green area in my trades as compared to red, because if I lose, I want to lose less. If I win, I want to win more. That's it. Okay, that's basically risk management. So yeah, these three things, and of course, this the last part which I said, the emotional part, which is very, very important, but no one can teach you. You have to learn it on your own. Okay. The next thing is risk management. The next topic is about risk management. I will take, of course, you can drop your questions in the chat, and I will take it from in the last 15 minutes or 10 minutes. Okay. So we have just three rules. Just three rules as a trader. That's it. Just three simple rules. The first rule is about trade size. Okay, your trade size has to be somewhere between 20 to 30% of your account size. Okay, but I said your trade size has to be somewhere between 20 to 30%, or between that. Okay, or it can be less than 20 also. Now, some of you can say, but yes, it looks like there's a very high trade size here. Now, what is the trade size? Of course, so for example, your account size is $1,000, then your trade size must be between 200 to 300, or maybe less than that. Okay, less than equal to something like this. That is what trade size. Okay, now why I use 20 to 30%? Because most of the traders, when they start doing trading, they don't use a account which has, let's say, 10,000 or 5,000 or 50,000. They use something like, say, 500, 1,000. Okay, I will never suggest you go above $1,000. Okay, if you want to learn trading, and if you are a beginner, always use less than $1,000. That is good enough to start with. Even you can use $100. That is also okay. Okay, but if you have a small account, of course you want to make some kind of money which you can use, and for that you can use 20 to 30%. But if you have an account size of, let's say, 20,000, 25,000, 50,000, then you can decrease your trade size, and you can make it like 5% or 10%, maybe less than 5%. But it's up to you. But the thing here is, do not go above 30%. In any case, doesn't matter how sure you are, the market is always unpredictable. So it doesn't matter how sure you are, do not use above 30% in your trading. So that's the first rule. Believe me, if you just follow the rules, your emotions will always be checked, right? You won't feel emotional about your trade. The second thing is about stop loss. Now, first and foremost, what is a stop loss? I think the market did went down. Okay, that's great. That's great. So yeah. So about stop loss. Now your stop loss has to be between 3 to 5%. That's it. Somewhere between 3 to 5%. Okay. Now what is a stop loss? Let's discuss that. Now suppose you bought a coin around 5 USD. Okay, that's a signal of buy. This is what we call a long position. In long position, we want the market to move in the upward direction. Okay. So now we want the market to move in the upward direction, of course. So let's say the market moved up and you sold everything around, let's say, $8. Good, great. Now you made profit. Everything is good. You're good to go. You're a good trader. But what if the market goes down from here? Then what you should do? Okay. As I said, we always want to protect our account. We can't lose all of our money. Okay, because as a trader, you need money to make money, right? This is the game. And money is the basic principle of this, or basic part of this. If you don't have money, you can't make it. Okay, so the only trader who can make money in this market, who has money. Now, even a little bit is good enough, but you should have money. And as a trader, we always want to lose less. Okay? So in this case, what you will do is you will use a stop loss. So for example, this is my stop loss somewhere right here. At a price of, let's say, just to make it easy, let's say 4 USD. Okay. Now what will happen at this price? Let's say stop loss. Now what will happen at this price? Of course, if the market moves up, everything is good. You will book your profit at $8. But if the market goes down, then what your stop loss will do? It will quickly sell your coins at a lower price, a little bit lower price. Okay, and you will end up in loss, but that loss will be limited. It will be only somewhere between less than 5%, as I said. It will be less than 5%, this loss. Okay. And as I said, generally our stop loss, generally we try to use is less than 5% everywhere. In swing trading, we try to lose less. Okay? And 5% is of course a less one. This is our stop loss in a long position. Now, what about the short position? Short position. Now, let's see, in the first session, okay, before we even started our course, I told you it doesn't matter where the market is moving. You can make money. If the market is moving down, great, you can make money on it. If the market is moving up, great, you can make money on it. Okay. Still, as I said, like, see, I was betting on when the market goes down, and the market is moving in the wrong direction, which is good for me. Okay. And of course, you can also make money just like that when the market is moving in the downward direction. Okay. Now, how to make okay, so let's before we even understand what is a short position, please show us how to set the stop loss on exchange. Not this time, but slowly as we go ahead. In the future classes, I will show you by taking a proper trade. Okay, I have to set up a little bit different account for that actually, because I can't open my original account which I use for trading. It's an open class. I have to share my screen. That's why. But of course, I will make sure to show you everything: how to do proper trading, how to exit, how to enter, how to figure out a stop loss, okay, and everything. But not today. Okay. So in short position, what we do is we try and we analyze the market, and we said, okay, now the market is going to move in the downward direction. Okay, so what I will do is I will sell my tokens or coins first at a higher price, and if the market goes down, of course I will book my profit right here, let's say, and this will be my profit. But what if the market moves up? In that case also you have to put a stop loss. Okay. And automatically if the market moves up, then you will buy the same amount of coin, and you will of course give it back to the exchange, because that's what we do in this short position. I will explain you later in the course, of course. Okay, but in this case, what will happen, of course? So in this one, of course, you can see you are going to lose less as compared to gain, right? And of course, as I said, like, we always want to lose less if we are doing a trading, any kind of trading. Okay, so this is for the short position. Something. Okay, so this is for short position, this is for long position, and basically stop loss means it stop your losses. The name itself says everything. It is stop your losses. Okay, and of course, as a trader, if you are in a good trade, let it go, let it run. But if you think the market is moving in the opposite direction of what you are expecting or what you have expected, quickly get out from the market as soon as possible. Okay, so that's a stop loss. Now let's talk about the third point, which is Risk to reward ratio. This is important. Your risk to reward ratio has to be less than, actually, sorry, greater than or equal to 1:5. Okay, it cannot be less than 1:5. Okay, at least for the next 8 months or 10 months. After that, once you become comfortable in trading, once you understand the logic, once you understand how to execute the trade, right, then you can decrease it. Then you can also make it 1:3, but 1:3 is like the minimum of minimum, right? But start with 1:5, stick with it for the next let's say 8 or 10 months at least. Okay, and then you can of course decrease it. Now, what is risk to reward ratio? Let me explain it to you first. I mean, of course, the risk to reward ratio is used by traders and investors to manage their capital and risk of losses. Let me use an image for that. Yeah, this one. I hope everyone can see it. Okay. Now it says, see, risk to reward ratio is 1:1. Okay. That means your win rate is 50% and your loss rate is 50%. What it means? It means if you are taking 2 trades, you have to win in at least 1 trade to become profitable. Okay. Now, if your risk to reward ratio is 1:, that means if you are taking 3 trades, then you can lose 2 out of it and still you will be profitable. Okay. It also means 1:1 is also means, for example, if I am in this case, right? I'm explaining it in more detail because this is also more important, just like how support and resistance was. Okay. See, in this case, from $5 to $8, the difference is $3, right? So my reward is $3. But if I take a risk to reward ratio, if I take risk to reward ratio of 1:1, in this case also my loss will be $3 also. Okay. Then I have to put my stop loss around $2 actually in this case. And if I divide this both numbers, what I will get? I will get 1:1. Okay, that is risk to reward ratio. Okay. So in 1:1 risk to reward ratio, what we are saying is that, okay, if we are expecting to make $5, if we are right, then we are also expecting to lose the same amount of money if we are wrong. That is 1:1. In this case, what we are seeing, if we are expecting to make, let's say, $5, if we are right, then we are expecting to lose $2.5, half of it, if we are wrong. Okay. So similarly, in 1:3, if I am expecting to make, let's say, $9 in a trade, then if the market goes down, then I'm expecting to lose at least $3, minimum 3. And if you divide 9 divide by 3, you will get 3 divided by 1. Right? It means 1:3. Same 1:4 and similarly 1:5. And I am suggesting you to use 1:5. Why? Because see, let's say for example here the win rate is around 16.67. So let's say 17 trades, and loss rate is around 83.33. So let's say 83. Okay. Now what it means? It means out of 100 trades, let's say if you took 100 trades, and out of 100 trades, if you lose 83 of them, still you will be profitable. Okay. Or still at least you will be at a break-even position. You won't lose money and you won't gain money. The logic here is very simple. Just that you have to win at least 1 trade out of 5. 1 trade out of 5 trades, and you will be profitable trader. Okay. As a trader, you don't have to win every trade. This does not work like that, to be honest. Losing is the part of the game. You will lose money, but you want to lose less and you want to win more. That is the overall thing. So we will be using 1:5 in the overall classes from throughout. Okay, and our goal is to make at least one trade right out of 5 trades. If I took 5 trades, I just want to get one right to be at the break-even position, so I don't lose more money, right? And if I took 2 trades right, that means now I'm profitable. Now I'm in a profit of, let's say, 10%, 15%, something like that. Okay. That is risk to reward ratio. Read about it. Read about it by using, I mean, you can go on YouTube and just type what is risk to reward ratio. You will get everything. Also, you can just Google about it. It's very simple, but it's very important. Okay. In Investopedia page, if you read what is the risk to reward ratio, you will see everything. Okay. You can read about it. Of course, it will take some time, but yeah. We usually use 1:5. 1:5 is the minimum. That's why I said greater than or equal to. Okay. But after 8 months or after 10 months, of course, you can decrease those and you can make it around 1:3 or something like that. It's up to you. Okay. But these 3 rules, make sure you use all of it. The trade size has to be between 20 to 30%. The stop loss has to be between 3 to 5%. The risk to reward ratio has to be between greater than 1:5. And all of these are rules which we call trading management or risk management rules. You have to execute it, because if you take one of them wrong, you will feel emotional about your trade and then you will lose money. Just simple, straight formula. So make sure you use this one. And of course, I think I have not shared this Jamboard in the group chat, in the Telegram group. Don't worry, today I will share it in the Telegram group. Okay, so you can also see everything what I have drawn here. You can revise it in your free time. Okay. Now, what is next? Till now, we have understood market phases, we have understood candlesticks, we have understood support and resistance, we have understood how to think as a trader, we have understood risk management. Now we will talk about trading setup 01. Okay. Now trading setup 01, I mean, there is no name for it. Of course, you can call it XYZ, ABC, it's up to you. I call it trading setup 01. Why? Because it is based on the concept of market phases and support and resistance. Okay. And of course, the theorems of support and resistance. So let's talk about trading setup 01. It's a simple trading setup. We are not going to use any kind of indicator for this one, but I will show you on the chart, of course, how to use it properly. Okay. Now, let me write. So T01, and of course, see, this kind of setup is useful when the market is moving in the upward direction. When the market is bullish, then it is useful. Okay, and of course, in which market phase the market moves in the upward direction, we have already learned that. See this one. In the third market phase, in the markup phase or in the distribution phase, generally the market moves up. Okay, so let me just write it right around here. So second phase and third phase. In the first class, I explained you why market phases are important. They are important for investment, of course, and they're also important for trading, because as a trader, you have to identify in which market phase we are in, and then only you can take a trade. Then only you can understand which trade to take. Okay? So in the second and the third phase, when the market moves in the upward direction, then only we can take a trade. Okay, that is that. Now, time interval. Remember in the candlestick class, in the previous class, I told you about the time intervals. So you have to use 1 hour chart, 4 hour chart, or you can use a 1-day chart. For swing trading, you can use all of them. And of course, generally when we analyze any chart, we go from a higher time interval. In this case, we have a 1-day chart, right? And then on a 4 hour time interval, and then we analyze again, and then on a 1 hour time interval, and then we analyze it again, right? So generally it's a from top to bottom approach. So we will analyze on a 1-day chart first, then on a 4 hour chart, and then on a 1 hour chart. On a 1 hour chart, we will try to enter in a proper way and exit in a proper way. Okay, we try to identify when to enter and when to exit by using a 1 hour chart. Now, this is of course swing trading we are talking about. So let me just write it swing. Okay, and in this case, of course, the market is moving up, so we are going to take a long position. Okay, so everything is written right here. Now let me draw two lines here. Okay. Now, how many people do we have here? We have around 17 people. Right? Now, can anyone tell me if the market is moving in the upper direction, then what kind of zone we can expect to see in the market? It's a very simple question. Let me explain again. What I'm trying to say, if the market is moving in the upper direction, then what kind of zone? You have two options, support zone and resistance zone. Okay. So if the market is moving up, then what kind of zone we can expect to see or expect to face in the market? Can anyone answer? In the previous class, we discussed that. Okay, we got one answer. Anyone else? You have two options just. Okay, got it. Good. Actually, good. Yeah. So we got 3-4 answers. Great. Okay. So of course, if the market is moving in the upper direction, then we will face some resistance zone, right? So this is also a resistance zone, and this is also a resistance. Okay, and the market is moving in the upper direction, or something like this. Now, if you remember the theorem 1, how a support is broken and how a resistance is broken. Okay, let me show it to you. So you will revise it. This one, see how a resistance is broken. It touched 1 time, 2 times, maybe 3 times, or maybe it can touch 7 times. Who knows? But then it breaks. Okay. So after touching sometimes, or I told you, I give you example of a wall. If you keep hitting the wall again and again, the wall will eventually gets broken, right? The same logic you will apply. So if you want to break this resistance, then of course we have to hit it maybe 1 or 2 times. And let's say on the third time the market moved up by breaking this resistance level. Okay, great. Now this is resistance 1 and this is resistance 2. Let's write it like 2. Okay, resistance 1 and resistance 2. Now what we want from here is that we want this resistance to act as a proper resistance. Okay, and then we can expect, we should expect actually, we want the market to move down till to the previous resistance level, which is resistance 1. Okay, and in the previous class I told you, if the market, so let's say this is a resistance. Okay, this is a $5 resistance mark. Okay, the market is already above this resistance, so the market has broken the resistance, and now the market is somewhere right here above the $5 resistance. Okay, now then there is a very high chance that the previous resistance, which is around $5, which is around resistance zone 1, it might act as a support. That's how resistance converts into a support. Okay, in the previous class I did mention about this part also. Yeah, right here also I mentioned. Okay, you see, now this resistance, the same zone, converts from resistance to a support zone, right? This is what we need. Okay, this thing is applicable in any kind of market. Doesn't matter if you're trading crypto, forex, stock, if you're trading gold, silver, crude oil, it's applicable in every kind of market, right? So that's why I said like this is a very basic thing, but very important. Okay, so now what I want is I want this area or this zone to act as a support. Okay, and of course it will act as a support, and then what will happen? The market will move in the upward direction. Okay, till to the R2, resistance 2. Now from here, two things can happen. The market can move up or the market can move down, correct? But as a trader, we don't care about it, to be honest. we only care about this. That's it. This is what we call a pattern. A pattern which is repeatable in the market. Okay. In the first class, in the first class also I told you about when I was talking about market phases. I told you that as a trader, our goal is to identify patterns in the chart. That's our goal. And as a human being, we love goal. I mean, we love patterns. Sorry. Okay. We do create patterns knowingly or unknowingly. Just like that in the market also, we do create patterns. And as a trader, our goal, our job is to identify those patterns. Okay. Now let me give you a formula how to create a trading setup. That's the formula. It's a very simple thing, and I'm sure if you trade, let's say for 1 year or for 2 year, you will automatically start creating your own setups. Okay, you will automatically start creating your own trading setups, and you will take those things. Okay? So let me give you a small formula for it. So first thing first, what we do as a trader, we try to identify a pattern. So that's a pattern, right? This is a pattern right here. Now, after that, what I will do, I will put a layer of risk management on this pattern. Risk management, we have already discussed. The stop loss, risk to reward ratio, trade size, everything. When to enter and when to exit is also under risk management. But yeah. So, and this, the combination of these two things is what we call a trading setup. That's it. Very simple. What you need is a pattern which is repeatable. And then you need a layer of risk management so you don't lose much money, right? That's it. That's our trading setup. And everything revolves around these two things only. Now what we have already our pattern is ready. Great. Now let's try to put a layer of risk management on it. Okay. So as I said, we are going to take a long position. So long position basically means buying low and selling high. Okay. So once the market takes a U-turn, then I will enter. And this is going to be the question of course. Okay. And just before the R2, somewhere right here, we are going to exit. Exit means take profit or enter means buy. Okay. And of course, as I said, just below the R1, which now act as a support, I am going to put my stop loss. Very simple, very clear cut thing. Okay. Now the question for you guys, we have around 17 people. Why I am entering right here? Why not right here or maybe right here? I mean, see, if I entered at this point, I could have made more money. I could have made few more percentage, let's say. But why I am entering at this point? Why not at this point? Okay. You can unmute yourself also if you want to answer. You can use chat if you want to answer. And of course, if anyone does not give answer, then of course I am going to explain. But think about it. Think about it. Okay, you know that the market is going up. Where I know that the market is going up. Pattern is visible. Hmm. Anyone want to add anything? Think what we discussed in the starting of this class. What we discussed. What is the basic first principle thinking as a trader? Of course, I mean, you know that the market is going to move up. Agree with that answer. Pattern is visible. Agree with that answer. But I need something else actually. Okay, let me explain. Good answers. Great. As I said in the starting of this class, as a trader, we have to think in a different way. Our mindset has to be different. And that is the most important part here, right? We think in terms of probability and risk. Understand? So whatever decision you make, I'm not just talking about this particular decision here. I'm talking about any kind of decision if you make in trading, always think in terms of probability and risk. What is the probability of success? How can I increase my probability of success? Okay, and how can I decrease my risk? The answers that I have gotten here is that you know that the market is going up. Yes, of course. At this point, I know that the market is moving up and pattern is visible. Of course, see till now what we are seeing is we are seeing just this area. This has not happened yet. So we are just seeing this one. So this, I mean, of course, we are seeing that, okay, the resistance converts into a support. We are in the second phase. Everything is good. Of course, there is a chance the market might move up. But you can say we are seeing 50% of the pattern, but not all of it. Okay? But I am buying right here. I am entering right here because I know that there are other buyers. Remember this one. There are other buyers who already supported the market at the support zone. In the previous class, I told you, you always find more and more buyers at the support zone. There are a huge number of buyers at the support zone, right? And you want to play on that level, okay, above that. So once everybody has already bought, the market has taken a U-turn, then we are going to enter. Okay, now if we are entering right here, that means we know that the market has already taken a U-turn. So there is a little bit less chance to go down. And also there are already buyers who supported the chart or supported the market at right here. If I have bought at this area or at this area, of course, there is a very high chance the market might continue to move down. Okay, that kind of thing can absolutely happen. Okay, let's say if I bought right here and if I put my stop loss, what will happen? The market will move down, it will hit my stop loss, and then it will move up again. So in this case, I'm already in loss. And then, of course, just because you entered at the incorrect time, you miss the chance of making profit. Okay, it's very simple in this case. So what we do, we wait for the market to take a U-turn. Okay, we try to increase the probability of the market to move up. We try to decrease the probability of the market to go down. Okay, and based on those two first principle thinking, we took this particular decision. And of course, from this point onwards, the market moved up in this case. And also the opposite can also happen. From here onwards, of course, the market can go down. And for that reason, we have our stop loss ready. So we don't lose much. Okay. Okay, so let's say the market moved up. Great. Everything is good. You are making profit. Great. Okay. Now, why we are exiting right here? Why not at this point? Why not on R2? Okay, we could have made more percentage, let's say 1% more or 2% more. But why we are not exiting at R2? Why we are not selling our coin at R2? And but before that, can anyone answer that? Why not? Why we are not selling at R2 and why we are selling before that? Think about it. At least give it 2 minutes to think, right? Think why we are not selling. We have a chance to make profit. We can make 1 more percent there. But why? Why we are not selling at R2 and why we are selling just before it? Okay. Think. Again, think in terms of probability and risk. Same thing. Again, it will come again and again in every class, to be very honest. Probability and risk. Probability and risk. Why we are selling before R2? Let me explain. Now see, there are many, see, market is like a jungle. Let me give you that example. It's like a Amazon jungle, let's say. In our market, we have different types of players. We have small players who are playing with $500 or $100. We have bigger players who are playing with 1 million or 10 million, right? Just like how we do in the, okay, it might go down as it reaches a resistance. Yes, absolutely correct. Absolutely. So as I said, I was saying we have different types of player in the market. We have small animals and we have bigger animals also, right? And believe me, as a small trader, you don't want to fight with the bigger traders. Okay. As a small animal, you don't want to fight or don't want to even come in contact with them. Okay. So that's why we are selling before it, right? Because there is a very huge chance that there is a big player who want to sell at the resistance level. As I said in the previous class again, as I was saying in the previous class again, that of course at support level you will buy, you will find buyers. At resistance level, you will find sellers. Okay, now that sellers can be huge. Someone can sell, 10 million worth of Bitcoin within a seconds. Okay, it's totally possible in the crypto world. Okay, but the same seller, if he or she wants to sell their tokens, for example, in the case of DOT or a chain link, or let's say coins who has lower market cap, then they can easily switch the market in the opposite direction. Just by putting a huge number of sell order right here, they can quickly move the market down. Okay, and we don't want that. We want to book our profit. Okay, and that's why, of course, as people were saying, it might go down as it reaches resistance. That is a true answer, correct answer. Okay, but we don't want to see, again, we don't want to risk our profit. That is the important part. Okay, so if the market touches the resistance, there is a very high chance the market might quickly go down because of the huge sell order. Okay, and that's why what we do is we just sell before it and we book our profits. That's it. That's what we want to do. Okay, and that's why we exit before the resistance level. Okay, now just three things which we also need to understand. The first thing is that why we are taking, why we are even studying about trading, why you are putting your 1 hour or 2 hours every week in this class, because you want to make money. As a trader, you want to make money. That's our job. Okay, if you are losing money continuously, then you can't say you are a trader. Okay, but if you are winning just $1, let's say you have an account of $100, and even if you are making $1 and then $100, great, you're a trader. But if you keep losing your money again and again, that means you are not a trader. So the first job is to make money. That's where we are learning about it. The second job is to secure your account, right? That's why we have a stop loss. That's why we have a risk to reward ratio thing. Okay, so as I said, like, the only people who can make money in trading is the one who has money. Okay, so always try to secure your account. Okay, and that's where we are putting a stop loss, right? So we lose less. And let me tell you one more thing. So for example, you have entered right here. The market had moved up. So the market is somewhere right here now. Somewhere, let's say, right here. Okay, now what you can do? Two things can happen. The market can continue to move up or the market can go down. Correct? Again, two things can happen, right? In this case, what you can do, you can remove this stop loss. You can cut it here. You can remove this one, and you can put a new stop loss around your entry position. So in this case, what will happen? You won't even lose any money. There is only one condition in this case. If the market moves up, you will make profit. That's it. But even though market goes down from right here, you won't lose money. Okay, so this kind of tips and tricks you have to play in trading. Okay. So yeah, the second job is to secure your account. The third job is to secure your profits, and to make sure you secure your profits, that's the thing why we are saying before the RP and not on it. Because see, in the bull market, if you buy any coin and if you just hold it for 1 or 2 months, you will eventually become profitable. Okay? But if you don't know when to sell, all your profit can end up in loss. It's very simple. Okay? Just let me check the trade which I am in. Okay, it's good enough. Yeah. So enter right here, exit right here. Okay, and also you can call it a sandwich theorem, for example. Okay, so in the sandwich, what we have a bread on the top, we have bread on the bottom, and then we have everything which is important, basically protein, vegetables, everything in the middle, right? This is what we want to eat. That's it. We are not going to eat breads, so we are removing this area, this one and this one. We don't want to eat this area, but we want to eat the protein. That's it. You can also call it a sandwich, bread, whatever you can call it, right? This is also one way of thinking about it. You want to make profit in the center. Okay. So that's the thing. One more thing. See, always buy at the support level. So the bull makes money. The bull makes money. Always sell at the resistance level. So the bear makes money. But the pig who buy and sell in the middle, they get slaughter. Simple things. Bull makes money, bear makes money, right? But in the middle, if you are trading, if you are buying and selling in the middle, okay, in this range, there is a very high chance you will lose money. Okay, so that's it. This is our trading setup 0, 1. Now let me take some questions. Short and long positions are in futures. Yes, short and long positions are in future tradings. And of course, whatever we are doing right now, even as a swing trader, does not matter if you are only doing day trading or not. But even as a swing trader, we will be using future trading only. Okay, it's just that we won't take any kind of leverage, in future trading. Actually, the trade which I've shared, that was day trading, right? But if you want to do the same kind of trade, you can also use a swing trading for that, swing trading setup. Okay, and if you don't take any kind of leverage, then all the things will act as a swing trading, right? But yeah, you can take short and long positions in future trading. That's absolutely correct. And also, if you have guys have time, or maybe what I will do is I will share 1 or 2 videos with you, so you understand what is a long position and what is a short position clearly. Okay, because I think most of you understand what is a long position, but some of you understand what is a short position. Because of course it's a little bit complicated. Because how can you sell something which you don't have at a higher price? That's a valid question. Okay. I will try to uh, give you some videos. Okay, please, how to set up this software. As I said, like I will show it to you, but not in this class. This one. So you say 1:5 is the best one for beginners. Yes, absolutely correct. 1:5 risk to reward ratio is the best one for beginners. Okay. Then we have some answers. Okay. As I remove the stop loss, does the ongoing trade close or what? As you remove the stop loss, see, for example, in this case, if we bought right here, and if the market goes down, right, and if the stop loss gets executed, if the price goes and touch your stop loss, then your trade will automatically close. It will close in loss. Okay, but if you remove it, okay, if you manually do it, if you remove it, then what will happen? Your stop loss order will remove, but your trade will be ongoing only. Okay, so I told you in one case to remove stop loss. Okay, so when you are in the middle somewhere in this area, for example, you are already in the middle, you already made some profit, then what you can do, you can remove this stop loss and you can put a new stop loss right here in your entry position. In that case, what will happen? Even if the market goes down, you won't lose any money from your account. Okay, that's in that way we can secure our account. Okay, we can secure our initial investment. Understood? I think I'm clear on this part. If you remove your stop loss, then your order won't be closing because you are removing it manually. Okay, and then make sure you put a new stop loss above or around at the entry position. The entry zones, we must learn to see them so that we can make a trading setup. Absolutely correct. Absolutely correct. So of course I will give you a homework. I mean, it's up to you guys if you want to do it. But if you share your homework in the community, I will look at it and I will of course discuss it. Okay, but that's up to you. Okay, so your homework can be something very simple. You just open TradingView, create an account on TradingView. It's a free to use, so you don't have to pay anything. Use a 4-hour chart. Watch some in the last class also I mentioned. Watch some videos about it, and try to draw some support and resistance. So for that you can use on the left hand side we have different tools. Okay. You can use geometric shapes here. Then you can choose rectangle and you can try to draw some support and some resistance. Okay. But you have to do it because it's a bulk class. There are many people who are coming in, so I can't check everybody's homework, but I will check some of them if you share it in the group, right? But yeah, you have to identify how to figure out support and resistance zone. That is a very, very, very important thing. So did I hear you well that 1:5 is the best for beginners? Yes. Yes. Let me explain. 1:5 is best for beginner. It's best for swing trading. Okay. Once you become profitable as a swing trader, once you know what you are doing, then you can also make it 1:3, but not right now. Homework on which coins? You can choose any coin which you like, to be honest. Okay, we have so many coins in the market. You can choose any coin. If you stick with the top 50 coins in the market cap, great. That will be very useful. Okay, but it's up to you. If you want to choose any other coin, you can choose. There is no fixation on that one. Bitcoin is always there. Ethereum is always there. Matrix Solana is always there. So you can choose any one of them if you want. If you want to choose any other coin, you can choose that also. Any other question, guys? In the next class, we will talk about trading setup 02. I will show you how to draw trend lines. And if we have some time, then also we'll talk about trading setup 03. Okay. And also I will show you some more tips and tricks, how to use a trend line and support and resistance, mixing of those two things, which I generally like, to be honest. Okay. Any other question, any question that you have for me? Any question, I'm happy to answer. If not, then of course we can conclude this class. In this class, we have learned about, of course, how to think as a trader. We have learned about the risk management, which is very important. Everything is important, to be honest, at this point. And we have learned what is a risk management, risk to reward ratio, stop loss. And also we have learned how to properly do a trading setup 01. Okay. We don't have time today, but in the next class, I will show you in the real chart. Okay. I will show you the example of this particular trading setup 01. Just make sure to remind me. Okay, so it will be easier. But yeah, I hope everyone likes it. I hope everyone finds it informative. The candle patterns are just the tell. So we need to add resistance zones. See, candle patterns are useful in the case of day trading, mostly in the case of day trading. Okay? As a swing trader, if you know about it, it's good. But if you also don't know about it, it's also equally good. Okay, it's not that much important. That's why I skipped that part. Okay, and that's why I shared the PDF in the group, so you can learn it on your own. But it's not that important. But yeah, support and resistance plus candlestick patterns, great, absolutely great. Okay, yeah. Any question, guys, for me? If not, then of course we will meet on Saturday, and we will discuss about more trading related topics. Thanks everyone for joining. Yeah, this Saturday. Yeah. Okay. In the previous class, we discussed about different topics. Just let me see. So I think we have discussed about it till here, till trading setup 01. So we discussed like what is risk management, how to think as a trader, and of course, we also talked about what is support and resistance and everything. And of course, we talked about trading setup 01. Let me just open this way. In this class, we will continue the topics again. We will talk about how to or what is the short position. And of course, we will discuss about trading setup 02. And then we will discuss about trend lines. because trend lines are a very important part of trading. So we will discuss about that too. Okay. And I will show you a few things regarding trend lines, how to draw it, how to properly draw trend lines in crypto market, okay, and everything. So just give me a second. Let me see. Okay, here we are. Okay, so we discussed about this part in the previous class. We discussed about trading setup 01. What is the formula of creating a trading setup and everything. Okay, and I think I did not show you the actual trade or actual setup on real chart. So let me try to find out something for you guys so I can show it to you. I think we have one on Bitcoin. Right here we have this one. Okay, so see, in the trading setup 01, what I told you that, okay, if the market is moving in the upward direction, then of course it will face few resistance, correct? So here I can clearly draw this one. See this area, this is my resistance. It's a very simple example. So you can clearly see this is a resistance, and then we saw a resistance again, and then market moved up. It, of course, it fought with the resistance, and then it broke the resistance, right? See right here, it broke the resistance, and then it went up. Okay, just like how it did right here. See, then it moved up and found a new resistance, which is resistance 2. Guys, make sure you are on mute, please. Thank you. Okay. So then the market went up, and now it has figured out a new resistance, which is resistance 2. You see this one? Okay. Just like how we draw right here. Then the market went down. So what happened? The previous resistance, which is resistance 1, now converts into a support. The resistance becomes support, theorem 1, right? So here what happened? The market went down, and you can see if I extend this one in the future, it's very clear. The previous resistance now converts into a support, right? And from here, of course, once the market takes a U-turn, then you will enter, and then the market moves up till this point, right? Till to the resistance 2. And after that, of course, the market can move up or it can move down. We don't care about it after that. Okay, this is what we needed. And here, let's say this is our setup. What we have to do, we just have to take a, on the left hand side, we have different tools, as you can clearly see. So I'm going to take a long position trade here. Okay, I will just, let's say if I have entered somewhere in this range, okay, that's my range. I will place my stop loss around 3 or 4%, always good. And I will try to put it something like this, my take profit level. Okay, so let me make it a little bit bigger so you can see it. Now you see in this case. So I am entering around 4181891. Okay, the market went up, and my target around is $51,718. That's my target, and my stop loss is around $40,067. Right. So if I lose this trade, if the market goes down, and if I lose this trade, then I'm going to lose just 4%. It's written right here. You see, just below my cursor, it says 4.35%. And if I win, then of course I'm going to win 23.46. And if you divide those numbers, 23.46, okay, divided by 4.37, then you will get a ratio of 5.31, which is greater than 5, right? In the risk management, we discussed about that we have to take a risk to reward ratio of 5 at least. 5 is the bare minimum. Of course, you can take 1:6, 1:10, anything is possible, of course. Okay, but 5 ratio is the minimum one. Yeah. So this is one of the example. Now let's talk about the second part, which is trading setup 02. Okay. Trading setup 02 is also very simple. Okay. So trading setup 02 is very simple. It's just like how trading setup 01 works, but in the opposite direction. That's it. That's the difference. Okay. Now, so we are going to take, of course, this is 302 T02. Here we are going to take a short position. Okay, that means we are betting that the market will move down. We are hoping that the market will move down, and that's how we'll make our money, right? Then here, of course, just like in the previous one, what we did, second and third phase, because the market was moving up. This will happen in the fourth phase because the market is moving in the down direction. Okay, and then you can also use 1 hour chart, 4 hour chart, and 1 day chart. Okay, generally I like to use 1 day and then go on 4 hour and then go on 1 hour. Okay, that's how it generally works. It's a swing trade, so let me just write swing trade right here. Okay, anything else? No, I think we have covered everything. Okay, so that's it. It's a short position trade. We will be doing this kind of trade in fourth phase, which is markdown phase, right? Okay, so just like how we did right here. Here the market was moving up, and when the market moves up, we generally find out a resistance, right? We generally see resistance, right? In this case, the market is moving down. So what we will see? Can anyone guess what we will see in this case? If the market is moving down, then you can use chat if you want to answer this question. What zone we will see if the market is dropping down? Okay, so we will see a support zone actually. Okay, so let's say the market is moving down, something like this. Yeah, support. Sorry. Yes. So yeah, so the market is dropping something like this. You can see. Of course, it will fight with the support level. Okay, and it will eventually break. So let me just write it. Support 1 and support 2. Okay. Then of course the market will down. It will go down from here. Now what we want this support 2 to act as a support, just like how we did right here. Okay, it's the same thing, but it's just in the opposite direction. That's it. So from here the market will move up. Now what we want this support 1 to act as a resistance. Support becomes resistance. When the market is moving down, this is how it works. Okay. So here what will happen? Our support will convert into a resistance. Okay. And the market will fall. And that's what we need actually. This is what we need. And of course, from this point, the market can go down, the market can move up. We don't care about it. Okay. That's it. This is what we need. This is our pattern. In the previous class, I also mentioned the same point. As a trader, we have to understand and we have to practice how to find out patterns. That's it. That's our goal. Okay. If you can find out patterns in the chart, great. That's our only goal, to find out patterns. Okay, something which is repeatable. And then what we do, we put a layer of risk management on it. Okay. So here the market goes down. Now what we have to do? Very simple. It's just an open question. How many of you don't know what is a short position? I mean, of course, I think everybody knows what is a long position. It's just buy low, sell high. But how many of you don't know what is a short position? How can you make money when the market is moving down? How many of you don't know? If just write, I don't know, or me, or something else in the chat, and I will take care of that. Okay. Because then I have to spend at least 5 or 10 minutes to explain you what is a short position actually. How you can make money when the market is going down. That's why. Okay. But yeah. So here what we will do is after the U-turn, once we get a rejection from the support level, the support becomes resistance level, then right here we will enter. Now here enter meaning sell. We are going to sell. Okay, that's how we take a short position. And just right here we are going to book our profit. So exit means buy, right? In this case. Okay. Sell high, buy low. Okay. And of course we will have a stop loss ready, so we will put our stop loss somewhere right around here. So that's my stop loss. Okay, so this is what we call a short position. Okay, so what we will do, we will enter at the top. Okay, and then we will buy back the same thing again at the bottom. Okay, this is how we make money in the short position. Okay, for example, let's say with Bitcoin. Right now we see this kind of thing right here. Okay? Let's put something. Let's go on 4 hours. Okay. Okay, so let's say if we bet now that the market might move down. So we are betting when the market is going to move down. Okay? So what we will do here, we will just take a short position. How you see right here we have a tool, short position C. So what I will do, this is just a random thing. I'm not analyzing it right now, but just so you understand. I will enter right here somewhere at this point. I will put my stop loss above my entry position. Of course, in this case, in long position, we put our entry stop loss below the entry position. In short position, we put our stop loss above the entry position. Okay. And then right here, we will book our profit. That's it. This is what a short position looks like. This is a short position. And this one is a long position. Okay. You can clearly see the difference here. Just the opposite. Let me just put it right. Okay. This is a long position. This one on the right hand side. And on the left hand side, this is a short position. In short position, at the top, we have a stop loss. In long position, at the bottom, we have a stop loss. Okay, so that's the difference. First and foremost, in long position, we are betting or we are hoping that the market must move up. In the short position, we are hoping that the market must move down. Okay, this is the key difference. Okay. Just 1 second. I have to check a coin actually. Column. Okay, looks good. Okay. Now, I did not get any message, of course, but I hope you understand what a short position means. Okay, let me explain it to you in a brief way. So, for example, what we do is, let's say if I have an iPhone. Let's say, okay, I have an iPhone 15 right now. Okay, and the price of iPhone 15 is around $1,200. Okay, and I know on next Sunday the iPhone 16 is going to launch. That I have that information. Okay. So, and generally what happens whenever there is a new technology coming into the market, the price of the old technology, it gets decreased. Okay. It decreases generally. So I know that, okay, on the next Sunday, the price of iPhone 15 is going to go down. Okay. That I have information. Why? Because there's a launch of iPhone 16. So now what I can do is, I have an iPhone. I can sell this iPhone to one of my friend on Saturday, let's say, okay, with worth of $1,200. Okay, and that guy, my friend, has no information about it, of course. Okay, so I sold it around $1,200. Okay, and then on Sunday, the price of iPhone went down to, let's say, $1,000. Okay, now what I will do is, I will go back to the same friend again, and I will say to him that, okay, I want my iPhone back. And of course, today the price is around $1,000 for iPhone 15, and then that's why I will only give you $1,000. Okay. So what now you have? You have your iPhone back plus difference of this price, which is 200. So in a very simple way, you made a profit of $200 just by figuring out when the price is going to crash or when the price is going to go down. Okay, and that's what we do in trading. Okay, it's not that simple, of course. I'm trying to make it very simple for you guys. Okay, so what we did here is, we figured out by doing analysis or by doing some kind of information by getting, okay, that the market is going to go down. So the market went down. What we did, we sell high. You see, we sold high. We sold our iPhone at a higher price, and then we buy back the same iPhone back at a lower price. So again, within a day, we have the same iPhone. So the thing is still there. Okay. And of course, you made a profit of $200 in that case. Okay. Or, I mean, see, generally when we take a short position, it's not that it's this simple. It's a little bit more complex, because what we do in the exchange, it's we borrow coins from the exchange. Okay. We created a future contract. That's what we call a future contract. If you guys have time, read about it. What is a future contract? what is a short position, okay, what is a long position. Okay, this is very interesting. We don't have that much time in our classes, so I can't just focus on one topic and elaborate you everything. But yeah, so read about what is short position, what is future contract, what is leverage trading, and everything. All these things are very important. Okay, but yeah, in more or less, this is what we call a short position. Correct. Now, let's try to find out this setup. Okay, let's try to find out this setup. Let's see if we can find out. Generally, it happens when the market is moving in the downward direction. So let's see. Okay, right here, I think we can see a setup. Okay, so you see the market is moving down, correct? And we can clearly see a support level right around here. See, that's a very good support. Okay, see this one. That's a very good support, right? After 1, 2, 3, and in the fourth attempt, the market is able to break the support level and the market went down. Correct? That's great. That looks very clear. And then we found a new support level. So support 1 and support 2. So this is my support 2, correct? Okay. Now what happened after that? From support to the market went up till to the previous support level. See how clear it is. The previous support becomes a resistance. This is what we talked about, right? Our previous support acts as a resistance. And then the market again fall down till to the, of course, this support level. Okay, so here what you can do is you can just take a short position when after the U-turn. We always enter after the U-turn. Okay, remember that part. So you can say, okay, but yes, this is a wick right here. You don't have to enter when the market moves up. You have to enter when the market drops down. Correct? So you have to wait for the U-turn. So I can put something like this. I can make, yeah, that's a stop loss. What is stop loss? And that's a profit right there. Okay. So in this case, you can clearly see if we will lose in this case. So we have a stop loss around 3%, 3.1%, good enough, nothing to be worried about. Okay. And if the market drops, then we are going to make how many percentage? 17.30%. That's a good profit. And if you divide 17.30 divided by 3.10, then you will get 5.57 risk to reward ratio. Okay. So this is a second example of trading setup, the first example of trading setup 02. Now what we will do is we will talk about how to draw trend lines. That's a very interesting thing, trend lines. So let's talk about it. See, first few theories about trend lines. To draw a trend line, we need 3 dots. First, let's say trend lines. Now, okay, let's start from line. How to draw a line? Now, to draw a line in mathematics, if you draw a line, a straight line, you need 2 dots, point A and point B, a starting point and ending point, right? And then what you do, you just draw a straight line, something like this. That's what we call a line. But if you want to draw a trend line, then what you need is at least 3 dots. Okay, and then you connect these 3 dots in a straight line, and then you call it as a trend line. Okay, now it's a trend. Now there is something going on. Okay, so that's what we need. 3 dots, and then we can call it as a trend line, first and foremost. Okay. Now, usually we have 3 different types of trend line. The first one is, of course, horizontal trend line, this one. Okay. The second one is a trend line inclined at a positive angle, something like this. And the third one is trend line inclined at a negative angle, that I can see. So we have 3 types of trend lines. Usually, you will only use this trend line and this trend line. I don't think you will ever use this, the horizontal trend line. Okay, because horizontal trend line is basically means support and resistance zone. So just draw a rectangle in that case. That will be much easier as compared to a trend line. Okay. But most of the time, you will be using this particular 2 trend lines, inclined at a positive angle and inclined at a negative angle. Okay, these 2 trend lines. Now, trend lines can act as a support and resistance trend lines. Okay, they can act as support and resistance. So for example, this trend line, okay, this is an uptrend line, of course. We can call it as an uptrend line, and let's say the market is moving up. So till this point, it's a support trend line, right? It is same trend line, but right now it's a support trend line. Okay, but what if the market drops down and will move below it like this? So then this becomes a resistance trend line. See, here it is acting as a support, and now it is acting as a resistance trend. Why? Because till here it is we are getting support, right? And once the market drops down below this trend line, now the trend line acting as a resistance. Okay, so it can be a single trend line which can act as both support and resistance. Usually, if we have a trend line which is moving in the upward direction like this, we call it as an uptrend line. Okay, and if we have a trend line which looks something like this, and let's say the market is moving on it like this. Okay. So now again, the same logic. This trend line is moving in the downward direction, of course, but you can still call it as a support trend line here and a resistance trend line right here. Okay, but if you see the overall market from this point to this point is moving in the downward direction. So that's what we call, you can call it as a downtrend line. Okay, so remember these two things: uptrend line, downtrend line, and any kind of trend line can act as support and can act as resistance. So there's nothing to be worried about. Okay. Okay, I have a question. Except for the support and resistance, are there any indications to look for in order to know which direction the coins are going to take? Support and resistance is one thing, trend line is one thing. Then we will be understanding about Fibonacci. So that's the second thing. Third thing, almost. You can use higher highs and higher lows, those kind of things. Okay, which we discussed in the first class about market phases. That is the fourth part. You can also understand patterns. We have not talked about patterns, but that is also the fifth, sixth thing. We can also use few indicators. Okay, so there are many things to understand or to figure out where the coin is moving. Okay, but support and resistance is like the very basic ones. Everyone uses it, everyone understands it. So that's why it's very important to understand support, resistance, trend line, and everything. Okay, they're the easiest one, to be honest. They're the easiest one to understand. Okay. So yeah. So now let's try to draw some trend line. We have discussed about it. We now know how to draw. Okay. And what is a trend line? So let's try to draw some trend. Now you can clearly see I have a trend line right here. Okay. Now how you can clearly see how I draw it. How I drew it here. Point A, point B, point C, and then point D. Okay. And now you can clearly see the trend line is broken. And almost that trend line is now acting as a resistance trend line. Almost. Okay. So this was a support trend line till now, and now it is acting as a resistance. So there is a chance that the market or Ethereum might go down. Okay, and this trend line will act as it. Now, yeah, I can draw, of course, I can draw many trend lines. Let me draw some for you. Let's go on daily chart. 3. How many confirmations do you need to predict the trend line? That is the question. You just need 3 dots, 3 points. That's it. Okay. So, I mean, the minimum is 3. The maximum, it's up to you. You can use 5, 7, 10. It's up to you. Okay. So, let me choose a problem. And one more thing, trend lines are everywhere. So you will find them on a 1-day chart, you will find them on a 15-minute chart, You will find them everywhere in every time interval. Okay. So right here you see, you can clearly see it, it's very easy, right? In this case, you can try to draw some. So let's draw this one. That's a trend line. 1, 2, 3. 3 is minimum. Now in this time it has 4, and then 5, and then the trend line is broken in the future when the market went down. Okay. So this is a trend line, and this can be also a trend line. See this one. 1, 2, 3, 4, 5, 6. That's 6. Okay, so this one is a resistance trend line. This one is a support trend line. Okay. Something like this can be a trend line. Can we think? No, not a proper one. Why? Because it has only 2 dots. There's no third dot, right? That's why this is not a proper trend line. Can we draw this as a trend line? Let's see. We can or cannot. Let's see. That's a trend line. Why? Because 1, 2, 3. And then there is a break of trend line. So that is also we can count. Okay? But this is not the 4th point. This is the 3rd point. So till here, we already know that, okay, something can happen in the future. We can draw, there are many triangles, of course. As I said, something like this can also be a triangle. So we have point 1, 2, and almost the 3rd point is right here also. So we have point A, point B, and point C. Okay, and then you can clearly see there's a break of trend line and the market move up. So as I said, I was saying trend lines are everywhere. That's a trend line right around here. See, point A, B, C, D. Then again we have a trend line right around here. Point A, B, C, D, and then there is a break of trend line. The market went below the trend line. Then you can see the panic in the market, right? Market went down by what? 27%. That's a good percentage. What I'm trying to say is that it's very easy to draw trend lines. Okay, almost every trader use trend lines. Okay, and you will find them on every chart. I mean, you can clearly see I've drawn it on most of it. So this one is also trend line. See 1, 2, 3. Okay. If I go on a, let's say, a minute chart. Let's go on a minute chart on Bitcoin because that will be easier to understand. Okay. So if you want to draw a trend line on a minute chart also, you may find it. So that's a trend line. See, A, B, C. 3 points we have. Good. Good. So that is also a trend line. Now, this can be a trend line. So this one, I believe. Yeah. 1, 2, 3. So that's a trend line. And trend line are everywhere. It's very easy to understand, easy to figure out. You just need a little bit of practice. That's it. Okay. Now, why? Why we have to use a trend line? Why? I mean, we understood about support and resistance because there is a supply, there is a demand, there are buyers, there are sellers, everything. Okay, and we understand why we have to draw support like something like this, right? Like using a rectangle, okay, and not with a line. We always draw support and resistance like a zone. It's not just a line, it's a zone, okay? But on the other hand, support and resistance is also only useful for a horizontal, this kind of level. That's it. Okay. But what if the market makes support throughout? Let's say something like this. Okay. So that's the support. That's the support. That's support. We know that. Great. But how can we connect all this support? So that's why what we did is we created a trend line. Okay. So that's a trend. So we have to make sense of all the support levels and how we are going to do that by using a trend line, by using a line. So what we did, we connected the dots, we connected the support levels, and we said, okay, This, of course, there is a support, but this is a trend line and the market is respecting the trend line. Okay. If a trend line is broken, then you will always see some kind of movement in the chart. Okay. For example, right here, I can draw a trend line, right? This one, see, it's a very simple trend line. 1, 2, 3. What happened next? You can clearly see. The market broke the trend line, and you can see the volume of or the size of your candlesticks. See how solid they are. They are bigger. There is more volume, more buyers. That means, so once a trend line is broken, you will always see some kind of volume. Now that volume can be in both direction. Of course, it can be a buyer's volume or a buyer's volume or a seller's volume. That I'm not discussing right now. But you have to make sure there is something is going to happen once a trend line is broken. Maybe there will be panic or there will be greed. In this case, it's a greed, right? The market went up. Now, for example, yeah, right here. I mean, I can, if I want to, I can draw a trend line right here also. See something like this: support, support, support. Sorry, point A, point B, point C, point D. And once the trend is broken, what happened next? You can clearly see the market went down. Correct? 59%. That's an insane percent of Bitcoin. Okay, so the market went down. So here a support trend line is broken, and once a support trend line is broken, because of that, the market went down. Okay, that's a support trend line. This one is a resistance trend line, and if the resistance trend line is broken, what happened next? The market moved up. Okay. Great. Yeah. So that is support and resistance trend lines. Now, yeah, we do have time. Let's talk about trading setup 03. You understood what is support and resistance trend line, believe, right? Yeah, see this one. Horizontal, positive angle trend line, negative angle trend line. This is what we call downtrend. This is what we call uptrend. That's a peak. Yeah, P is for peak, T is for trough. Okay, and there is a time, of course. Time and price is there. Okay, but this is a trend line. Always use 3 touches to draw a strong trend line. 3, minimum is 3. Maximum it can be 4, 5, 8, 10. It's up to you. Okay. Now let's talk about trading setup 03. Trading setup 03 is important to understand, but you might not use it. Okay. Why? Because crypto is more volatile. That's why you won't use it most of the time, but it's important to understand. So let's talk about trading setup 03. So this T03, you will use T03 when the market is moving in a sideways direction, mostly. So basically in the accumulation phase or sometimes in the distribution phase also, because as I mentioned in the first class, there are 2 types of distribution phase. Parabolic is also distribution phase and sideways is also distribution phase, correct? So yeah, sideways movement, accumulation. Okay. In trading setup 03, you can take 2 types of position. You can take long position also, and you can take short position also. Okay. Both. You can take both positions. I mean, when I say both, I don't mean to say like parallelly you have to take both positions. Okay. Once you can take long, and then if you think the market is going to drop, then you can take short after that. Okay. So long and short position. Of course, just like every time. So you can use 1 hour chart, 4 hour chart, and 1 day chart. And this is also swing trading. Let me just tell you, you are not going to use this strategy. I don't think you are going to use it. So there's a big cross right around here. Okay. But this is important to understand. We have to understand how the market moves, how the market behaves. That's why I'm teaching it to you. Okay. Okay. So now we have 2 trend lines, horizontal trend lines, of course, but we have 2 trend lines, right? So I can call it as a support trend line and that's my resistance trend line. Okay, and of course the market will move between these trend lines, something like this. Yeah, that's it. So, and let me give it some names to this point, so it will be clear. So let's say A, B, C, D, and this one A dash, B dash, C dash, D dash, and E dash. Okay. So the bottom ones are A, B, C, D, and the top ones are A dash, B dash, C dash. Wouldn't that be considered zone? Okay. Yes, that's why I said. I will come to that question. Of course, I will come to that question. It's a good question. Okay. But let's say if I'm drawing a trend line now. Okay, I'm just drawing a trend line. I'm not drawing a zone. I'm just drawing a trend line. Okay. And the market is moving between these two trend lines. Okay. It's touching them again and again. The market is moving between this. Now see, the combination of all these things is what we call, I mean, of course, we call it as a trend. Okay. A sideways trend. Okay. A sideways channel. When we say like a channel means that the price is moving between two areas or two zones or two trend lines. Okay. Something like that. So that's what we call a channel. So a channel always looks like this. Okay. So we can call it just as a channel, a sideways channel, okay, or horizontal channel or something like that. Okay. Now we have point A dash, B dash, C dash, D dash, E dash. Great. Okay. Now you know everything. So if the market is moving up, you have to enter right here. You have to exit right here. You have to put a stop loss right here. Okay, that we know. If the market is going down, then of course you have to put a entry right here, exit right here, and a stop loss right here. Okay. Now think about it. If the price is moving sideways between two trend lines, one is a resistance, the other is a support trend line. Okay. Now, any one of you, please do give me answer. If you, I mean, if it's a wrong answer, no worries, but do participate. Can anyone tell me on which point I should take a trade? On which point? Can I take a trade on A dash? Can I take a trade on A? Can I take a trade on B dash or B or C dash or C or D or what? On what point, on which point I should take a trade? Remember, in this channel, we can take both positions, long and short both. So there is nothing to be worried about. Just tell me the number. The A dash, B, what? I will give you 1 minute to think about it. It's an important thing. Think about it. Why? I mean, on what point I can take a trade? C dash, C, B dash, B. On what point? Anyone? On what point? E dash. Okay. We have one answer, E dash. Okay. B dash and B. Short. Okay. Okay. B dash and B. Anyone else? B dash and B short. Great. That's a, I mean, of course. It's not the correct answer, but that's the answer, of course. Okay. So let's make it clear. See, as I told you, we need minimum 3 dots, 3 points to identify a trend. Before that, we can't say if it's a trend or not. Correct? So that means I can't take a trade on A dash. I can't take a trade on A. I can't take a trade on B dash. I can't take a trade on B. I can't take a trade on C dash also. But once we have a C dash, that means we know that there is a very high chance that the market might take a U-turn from C, and once the market takes a U-turn from C, then I can take a trade. So from here onwards, I can start taking trades. So I can take a trade on C, on D dash, on D, or in E dash also. Okay. So, but the first five generally we ignore, the first 5 points. Okay. Why? Because till this point, we don't even know if this is going to be a trend or not. In this area, we don't even know if this is going to be a trend or not, right? We need 3 dots, correct? But once we have a third dot on a resistance line, trend line, or maybe on a support trend line, then we know that, okay, there is a chance that it might act as a channel. Okay. So, of course, you can take a trade on C dash, D dash, D, and E dash. Okay. Now, I think I don't need to show, but this is how we enter. So we'll enter right here. We will put our stop loss right here, and we will exit right here. Again, if I want to take a short position, then of course I will take a entry position right here, exit point right here, and a stop loss right here. Okay. So that's a long position. That's a short position. Again, you can take a long position. Nothing to be worried about. So this is what we call a channel. Okay. Now, why we should not use this particular setup? It's a good setup. Everything looks good. This is a theoretical part, so everything looks good, right, in this one. But in real life, what will happen? In real life, this kind of thing will happen. A small thing, right? So this is our trend line, resistance, support. And what will happen? The market will move something like this. This is how the market moves. Okay. Now, if you draw a line, a trend line, just a single line, what will happen? Your stop loss will trigger. Your stop loss will trigger again and again and again and again, right? And that's not a good thing for us. We don't want that kind of situation. And because crypto market is more volatile, okay, it can move like 5% is a very easy move in crypto. It can happen within 15 minutes, within 5 minutes also. Okay. So that's why what we do is we don't use this strategy generally. Okay. And now the question was given here that wouldn't that be considered zones? Yes, we should consider this as a zone. So if you want to take this kind of trade, what you should do? You should create it as a zone, something like this. Something like this. You should create it as a zone. Like this. Then you can take a trade. Okay? But do not use a line. I mentioned this part because I wanted to show you what the channel looks like. This is what we call a horizontal channel. Because maybe if you go on YouTube and if you go on and read about this stuff, you will see this thing. And then you should not be worried about it. Okay, we don't know what is a channel, right? So this is what we call a channel. In a channel, in a horizontal channel, especially, use a zone instead of a horizontal trend line. Okay, and that's why here also I said you may not be using this horizontal trend line most of the times, right? Because a horizontal trend line is what, like, it will be better for you if you just use a zone, right? That will be good. Yeah. Example, if you want to, of course, we can talk about the example itself. Let's try to find an example. On Bitcoin, I think we don't have, not that much. Horizontal channel. I think it will be very hard for us to find an example of horizontal channel because that's a very, I mean, okay, we do have. Now I remember. 1 second. Let me show you. I remembered now. We have that on link. Yep, right here we have. Yep, this will work. So here I can use, see this one option on trend lines. We have an option called parallel channel. Okay, so I can draw something like this. See, that's it. That's what a channel looks like. Sideways movement, A, B, C, A, B, then a point, third point C. Okay, maybe if you count this one, of course you can count if you want to. But this is what a example of channel. This is what it looks like. Yeah, this is what we can call it a horizontal channel. Okay. Now, let me give you some homework. I think I have already given you homework in the previous class. I gave you homework in the previous class. And if I check the Telegram group, I don't think anyone has submitted any homework. I think no one had. This is our group, right? Has anyone have done support and resistance homework? If you have, then please share it in the group, so it will be easier. No, I don't think anyone has done, but no worries, no worries. Okay, so see, let me show you how you can do it. Okay, in a very easier way. So let's open Bitcoin chart. Let's see where is Bitcoin. Yeah, let's open Bitcoin chart. Now, what I want from you guys actually is very simple. Open a chart on tradingview.com. How to open it? Let me show it. If that's the problem, then let me show it. Okay, this is a recorded video, so of course you can watch it. I didn't, because TradingView needs subscription. No, TradingView does not need a subscription. I am still using a free account on TradingView. See, upgrade now. It's saying upgrade now, 30 days free trial. You can create a free account on TradingView. You don't need to pay a penny to them. Okay, you can just open an account, a free account, and use it. You don't have to buy the subscription or something like that. Nothing to be worried about. I am still using the free version, right? And it's working fine. Okay, so that's your home page. Something like, to look something like this. 1 second. Yeah, it will look something like this. Okay, that's your home page right here. Now what we have to do here, we have to just go on the markets, the third option from the top, and then you can just click on this area, crypto. See, crypto, and click on Bitcoin. That's it. Markets, then crypto, and then Bitcoin. This point. Okay. If I click on it, automatically a page will open, and this is how it will look. It says Bitcoin, the price of Bitcoin, a C line chart, and everything. Now what you have to do? Now you have to click on this option. See on super charts. This option. Okay. If you click on this option, automatically you will see. Now you will see the chart. That's a chart right here. Okay, understood? Now you can use different tools on the left hand side. You can change the time interval. You can add few coins in your watch list. It's up to you. What now you have to do. Okay. Now what you have to do is basically very simple. Draw some support and resistance by using rectangle. So that's a support for me. That's a resistance for me. Okay. So resistance, support. Correct. Now what you have to let me do in the proper way. Let me just write it here. That's a resistance. Okay. And this one is a support. Okay. This is how it looks. Correct. This is what you have to do. Draw resistance, draw support. Then what you can do is you can just see this camera icon on the top right corner. We have this camera icon. Take a snapshot, it says. If you click on it, then you will see different options. Download image, copy link, open in a new tab, tweet image, and everything. What I can do is I can copy the link. Of course, you can also download the image if you want. Okay. But the easier one is the copy link. Copy the link. Okay, it will here say link to the chart image copied to clipboard. And if I want to send it to everyone in the Zoom chat, see, I can just send a link. You can all check. Okay, and if I want to send in the group, I can send it like this. Done. So this is the link. And if I click on the link, you see now what happens? This opens. Correct? A very simple way to share your analysis with me. Okay, it won't be, it's not that much hard. It's very simple. Okay. And if you want to draw some trend lines, of course, you can draw. Let me give you an example. Let's say Gala. For example, if I want to draw a trend line, let's do it. Boom. Okay, that's a trend line. Point A, B, C, D, and then this trend line becomes a resistance line right out. Right here, you can clearly see. Okay, that's a trend line. I can draw multiple trend lines, of course, if I want to. Let's say this is also a trend line. Okay, let's play with it. Okay, again, click on the snap, take a snapshot option, copy the link. Okay, and send it in the group. You can send it in the group. Also, if you want, you see now. Okay, 1 second, it will upload. I think it will also show. I believe. Yeah, see this one. This is how it looks. So it's very easy to share your signals or share your analysis with. It's not that much hard. Okay? But yeah, any question that you have for me, guys, please. We have completed till here. Almost till here. Okay, this is the 4th class, I believe. So, okay, we still have time, so nothing to be worried about. In the next class, we will talk about trading setup 04, 05, and 20-day moving average. All these 3 topics we will complete in the next class. Today, we completed trading setup 02, trend line, how to draw trend lines, and trading setup 03. If you have any question, we have 4 or 5 minutes left in this session. Please drop your question, so I will take it from there. Any kind of question. Even if you think it's a stupid question, you should ask it. Please do. Okay. Please drop your question in the chat. I will be very happy to answer your questions. Make sure they are related to trading because that's my department. I understand trading. I do trade. So any kind of question, if you have related to trading, please send it to me. I will be happy to answer. Even if you think it's a small question, just send it to me in a private. Nothing to be worried about. Okay. And whatever you are learning, see, if you guys are attending the class and not even thinking about trading or not even attempting to trade a trade, right? Please think again, right? Do give it some time. Do read about it. It's possible to make money in the market. Okay, there are people who make good amount of money. So think about it and give it a chance. Okay, because you are already taking classes. You are spending your 1 hour, I think 2 hours per month per week. Okay, in the classes, and make sure you just give at least half an hour or an hour, let's say, per day to learn about trading. That will be easy. Okay, within 4 months, maybe in the next 6 months, but eventually you will learn how to trade, and eventually you will start making some money. Okay. Any question, any kind of question? We have around 19 people. That's good. We have good number of strength today. Okay. If not, then nothing to be worried about. If you have after this class, if you have any question, you can always share it in the BTCV community on Telegram. I will reply to them. Just try to tag me. I don't remember actually, but what is I don't remember my username, but yeah. But this is me. I mean, you can just find out who I am and what's my username. So just if you have any questions, just tag me in that particular message. That will be easier for me to understand. Okay. Yeah. If not, then of course we can conclude this class. In this class, we have talked about 3 topics: trading setup 02, trend lines, trading setup 03. Okay. In the next class, we will talk about trading setup 04, 5, and we will talk about moving average. Moving average is the first indicator. Okay. In the next class, see, we have already completed. In the next class, we will complete all the beginner setups. After that, things will get interesting. Things will be more complicated, of course. Okay, and then we'll talk about indicators, base breaking strategy, Fibonacci, different topics, different interesting topics. Okay, so yeah, I hope you found this session informative and useful. If you don't have any question, that's great. Nothing to be worried about. Let's meet in the next session, which is on next Saturday. Okay, and maybe if we change, then of course the team will inform you. Yeah. Thank you, everyone. Thank you for coming. Thanks everyone for joining. Thank you for the yeah. Welcome, Sasa. Okay, bye bye everyone. Have a great day. Bye bye.